Hello and welcome. Yesterday, the European currency lost value against the US dollar as expected. The euro was highly overbought. At the same time, there is no objective reasons for its rally. After all, the US Federal Reserve intends to raise interest rates and European economic growth is slowing down due to surging inflation. Furthermore, there is uncertainty around gas prices after Russia's decree on ruble settlements. In general, the European central banks need to tighten its monetary policy while the economy is suffering a contraction. The situation is similar in the United States. Many analysts expect the US economy is about to slip into recession. Thus, there are no grounds for a further rise in risky assets. According to the trading chart, traders appear to have started locking in profits. Moreover, yesterday was the end of the month and hitting new monthly highs was unlikely. Today's macroeconomic calendar is full of important releases. Some EU state members will publish a number of economic reports on manufacturing output. Eurozone manufacturing activity is expected to slow in March. If the indicators fall below analyst focus, the euro will come under strong downward pressure. In the second half of the day, the US will release jobs data. If the unemployment rate declines and non-farm payrolls increase and beat market expectations, the US dollar will gain value. This will not leave a chance for the Fed to tap the brakes on aggressive rate hikes. Besides, traders may take notice of the labor force participation rate and average hourly earnings in the United States. However, these reports are of secondary importance. Of course, the focus of market participants will be on the US unemployment rate and non-farm payrolls. Thus, volatility may increase. As for statistics that could have a severe impact on the pound sterling, today's macroeconomic calendar is bereft of economic releases from Britain except for the manufacturing PMI. Therefore, stand ready to be guided by data from the US. Now, let's take a look at the euro-dollar pairs chart and consider from a technical point of view. In the first half of the day, the pair will hardly show significant changes. In the second half of the day, US jobs data may lead either to steep increase and a breakout of 1.1095 or a decline in the European currency, which is the most likely scenario. In this case, bulls will strive to protect the level of 1.1035. At this mark, long positions can be considered only amid a false breakout. Alternatively, it will be possible to go long on a rebound at 1.1005 and 1.0977, counting on the intraday correction of 25-30 pips. If the price fixes below 1.1035, traders will have a chance of going short with a view to reaching the target levels of 1.1005 and 1.0977. A strong sell signal will be created in the event of a false breakout at 1.1093. Major market players may push the euro up, while others may see it a correction. Thus, the European currency is likely to drop following US jobs data. If bulls trading activity is subdued, traders are recommended to open short positions at 1.1131 or on a rebound at 1.1174. Meanwhile, the pound-dollar pair is still trading within a sideways range. A false breakout at 1.3142 will create a sell signal, thus dragging the pound sterling down to 1.3106. If the price fixes below this level, it will be possible to open additional short positions with a view to approaching 1.31. 1.3071. At this mark, it will be a wise decision to go on a rebound counting on the intraday correction of 25-30 pips. If the price forms a false breakout at 1.3106, the lower boundary of the sideways channel, traders will be able to buy the pair. Consolidation above the level of 1.3142 and its top-down test will lead to a further increase in the volume of long positions. In this case, the British pound will recover to 1.3179. At this level, short positions can be considered only amid a false breakout. Alternatively, traders may go short on a rebound at 1.3219, trying to gain 25-30 pips from the pair's intraday correction. Good luck and have a nice weekend.